Welcome back to Pete's Investing. We review the weekly progress of some random blue chip stocks from Australia, the US and Europe. These are updated every weekend after the week's close. And this week's been a bit of a roller coaster event. So let's get into the background. First of all, we review the indices and share prices every weekend. So please refer to our playlist there. But also refer to our strategy playlist. It's where you find the way we trade these stocks, following the simple trading strategy, the average down process, and some money management ideas. Let's first of all jump to our table of results on the stocks we're looking at. So again, you can see here for Commonwealth Bank, BHP, Volkswagen, Telefonica, JPMorgan, Johnson & Johnson, and Caterpillar. So again, from Australia, the US, and Europe. And we show here the dividend yields, also the ex-dividend dates of those expected, and the profitability of the buy and sell strategy we follow versus buying and holding that stock without selling it, and also the drawdown requirements or the maximum drawdown. These have been accumulated, and this is typically over a 17-month horizon. And then this calculates out on average the profitability buy and sell on a monthly basis approximately. So you can see here we're doing about consistently $400 to $500 a month from these stocks. So let's first look at our first stock, being the Commonwealth Bank. And again, here we look at the 15-minute chart. This is over about roughly a 17-month horizon. And we look at the buy and sell strategy. This is a profitability chart for the buy and sell strategy. This is a profitability on the buy and hold. In other words, we haven't sold we haven't traded any of the stocks, just simply buying it the same time back here as we did for the buy and sell strategy, and we hold on to it. We're following the buy and sell strategy. That's where these bars show. We sell out and we re-enter the trade back here. So you can see here, for example, for the CBA, it's generated $1,071 versus $531 for the buy and hold strategy, and that's reflected in our table of results here. $1,071 versus $531 to buy and hold, and our respective returns on that profitability. Okay, so going back to our charts, you can see here the CBA fell below the MA 200 level, broke down below quite a bit, gapped down a bit, and it's been going pretty much flat for the whole week. And these vertical lines illustrate the weekly breaks. So last week was a pretty good week. We entered each of these trades enters $2,000 worth. Just keep that in mind. So we're entering $2,000 worth of each one. So $2,000 worth equates to just under about 20 shares for the Commonwealth Bank. So we entered 20 contracts there, or 20 shares there. It rose quite nicely last week, but then it fell off this week. But we haven't sold out yet because we don't follow the stop strategy. We average down. So we, again, follow the money management rules to understand how that works, and we then avoid using stops. So it did drop off, but again, a pretty flat week for the CBA. For BHP Australia, this did quite nicely for the week after dropping down below the MA 200 last week quite dramatically. Then it made some nice gains and it's broken above the MA 200, although the MA 200 is still in a downtrend. Still a positive move, and we've been holding this position now. We entered back here a few months ago, so it's been in a bit of a roller coaster, hence our concept of the roller coaster event. So it's made some nice gains this week, although it hasn't closed out the position yet and hasn't averaged down any further shares on this one. Volkswagen. This has been a consistent downtrend for the last 3 weeks after it broke down below the MA 200 3 weeks ago. We entered the trade back here, again, because our CCI 100 broke above the 0. That's our entry point. And we entered 7 contracts there, but the price has been falling since, so our profitability has dropped off there. But nevertheless, we're still doing okay overall for the long term, but not a good sign so far. But we haven't added any further shares for this one. And if it goes much further down, we may enter and double down on our shares in the coming days or weeks. Telefonica. This also broke down below the MA200 for the week. You can see there it closed out early last week at a nice little profit. Then it re-entered the trade back here after it broke the CCI 100. Broke above the CCI 0, I should say, of the CCI 100. Although it's broken above, we're still in a trade. We're not going to stop it out, and we're going to see what happens and average down if it gets any worse, or close out with a profit if it goes and accelerates above the MA200. JPMorgan. This has been a downtrend last week. No entry was made until early this week. So you can see there it made an entry there, and it's been going up since then. So that's a nice little positive move for JPMorgan. We need to see it break above this resistance line for any major gains. But still, our trade is looking good and nice little profitability so far. Johnson & Johnson, one of the vaccine charts, and if you get a chance, do refer to the video we made a few weeks ago on the vaccine companies and how their charts are performing consistent to the market news and relative to each other. But this is Johnson & Johnson, one in our blue chip share portfolio. It's been going pretty much flat this week and still below our MA200, although it's broken above late this week. But it did so also back there, but didn't. It actually fell again below. So let's keep an eye on it. The position was opened a few weeks ago back here, middle of May. So it has broken down below that, but no further positions have been added. So we're still holding 12 contracts on that one. Lastly, Caterpillar. Again, the last few weeks had been a massive drop on the Caterpillar price, but it has broken above the MA200 this week. So that's a nice positive sign. We're still holding 8 shares on this one after opening back about 5-6 weeks ago up here. So in middle of May, and let's see what happens with that one. We need to obviously follow our strategy. We need to break above our, in this example, we need to be above that profitability level before we would consider exiting the trade. But it probably needs to fall a bit further before adding any further positions. So again, let's summarize our results. So for this roughly 17 months, and that's the approximate number of months each of these trades have been entered, we've generated just over $7,000 for the buy and sell strategy, $5,600. And again, these are a mixture of Australian dollars, US dollars, and euro. But we'll just call it a dollar currency. But on average, they've generated about $444, or between $400 and $500. That's been consistent since we started monitoring these trades since January this year. Okay, and if you want to review any particular chart, please drop me a line in the comments section, and we'll look at that and review it in future videos. Thank you, and happy trading.